Visiting Angels, we're committed to enriching the lives of elders and their significant others. Our monthly coffee chat sessions aim to make your lives easier and better by providing quality information from our expert panelists. We're here to elevate your quality of life, offer practical wisdom, and ensure you have access to valuable insights.
For our coffee chat with Visiting Angels, my name is Dexter, and I am joined by Will, another awesome guy from Visiting Angels, and we're really glad that you're here. Whether you're sipping your coffee at home or tuning in from the office, we appreciate the time you are taking to be part of this important conversation. So we are seeing some people are coming in from Plymouth. I hope I read that right. Manhattan, Mayfield Heights, District of Columbia, Gettysburg. All right, welcome. Anyway, today we're diving into a topic that a lot of people tend to avoid, but really shouldn't, and which is long-term care. Our session today is called Long-Term Care, the Basics, and that's exactly what we're here to cover. What it is, why it matters, and when to start thinking about it. We know this can be a tough subject and it's emotional, it can be complicated, but let's be honest, no one really wants to plan for needing care someday anyway, but it's inevitable. So the truth is, being prepared makes everything easier down the line for you and your family, for the people we love. And of course, we're excited to have our special guest today, our speaker. So our speaker today is someone who's been in the insurance and planning world for over 35 years, and he's helped a lot of families figure out how to protect what matters most. He's not here to, to be selling anything, but really just share real info, real stories, and answer your questions first and foremost. And that's at the top of it. But before I show him and finally introduce him to you, we'd like to tell or remind everyone that a recording of this session is underway and it could be sent to you via email. And also, if you have questions, we'll be answering them at the end of this session. And lastly, I'd like to call on my colleague here, Will, before I call on our speaker to tell us some things before we start. Will?
Yes, great introduction, Dexter. And thanks everyone for taking the time to join today. What I want to do is just kind of echo what Dexter just said. And what I want to do is mention that this is an extremely relevant topic. It's something that, as Dexter said, we don't like to think about. But at Visiting Angels, what we help do is help seniors age in place. But we also do work with a lot of different facilities. And like Dexter said, planning is really important. And with good planning, it allows you to kind of control, the last chapter of your life. So with that, Joe, I look forward to your insight.
Well, thank you, Will, and thank you for the introduction and from you and from Dexter. And I appreciate being here. And so let's see. I was told initially that I should be able to talk on sex after 60. Is that what we're going to be talking about today? Oh, no, that's another day. Today is going to be long-term care. And it's the basics. We're going to be covering the what, the why, and the when for long-term care. Now, when I'm talking about long-term care, there's two main categories of information. One of them is when you say long-term care, you're talking about the care itself, the help that someone needs. You can also use the term long-term care to talk about insurance coverage, and I'm going to cover both areas. First, let's talk about the care itself. What does long-term care mean? It's custodial. That's the word applied to it, custodial care. It's non-skilled. It's non-medical. It's not your health plan. It's when someone needs help with activities of daily living. You know, those standard things: bathing, transferring, dressing, feeding, toileting, and continence. Those are the basic activities of daily living that are considered. There's also a separate category that has nothing to do with the physical infirmities. It's cognitive impairment. Dementia, which is the umbrella term, or Alzheimer's, which is the most frequent indication of dementia. Now, one of the things we should talk about is, where is care provided? Well, first, it's usually at home. It's at home, and the help is provided by the family. But it can also be in a care community, an adult daycare center, a skilled nursing facility or nursing home. It can actually be, the care can be provided in any venue at all. It also can be provided at any age. Long-term care is not something that is just for old people. Long-term care can be for someone, some very athletic person who injures themselves and needs help because they've got 2 broken legs from a mountain climbing accident. It can be from the trauma of an auto accident. It can be from a disease, a medical condition, like Parkinson's, for example. Or care may be needed just due to frailty that comes with age. Let's face it, as we get older, stuff happens to us. We're not as strong as we once were, not as good at balance. Sometimes we fall down. The majority of care is provided to folks that are in their mid-70s and older. And there's a statistic I'm going to throw out at you. And that is that 70% of us, from the age of 65 until that long dirt nap, are going to need care. 7 out of 10. Hold on to that thought for a while. So we have the when, the where. We don't know how long someone is going to need care. It really depends on what the condition is. I can give you averages. The average for care, 3 to 3.5 years. If Alzheimer's or dementia is involved, that average bumps up to over 8 years. And remember, that's averages. There are going to be some people who need care longer and some who are going to be able to have care for a shorter period. The shorter ones are because they get well quickly or they die. So it's just averages. Keep that in mind. Okay. What's it going to cost to have care provided? Well, there's a big range involved here. If it's just homemaker or aid, you may be looking at $6,000 a month. If it's a skilled nursing facility, semi-private or private room, you're looking between $12,000 and $15,000 a month. If it's a memory care unit, you're looking at more than $20,000 a month. Factor that into your budget, and you'll realize how long your savings is going to last. If you're interested in researching various costs of care, a very good resource is the Genworth Cost of Care Survey. Genworth has been in the long-term care business since the very beginning, and they have a website called Care Scout, CareScout, carescout.com/cost of care. And it's a wonderful resource for getting information. It should be no surprise that costs of care are going up all the time. Inflation is a real force, like gravity. There was news recently that Maryland had a larger increase in cost of care in various categories than the national inflation average. So, and I didn't do research in other states because I wasn't sure who else might be attending, but it's worthwhile if you're interested to check out how much increase in cost of care occurs in your location. One thing to keep in mind, you may already know this, long-term care services are not covered by Medicare, expressly excluded by Medicare. So how do you pay for long-term care services? Well, the first option is to pay out of pocket. It's called self-pay. You're using your savings, your retirement money. You sell assets, that vacation home you bought years ago, the boat, the sports car, all these things that you accumulate when you need care, they have to be paid for somehow. And the problem is when you run out of money, the only option left is the safety net of Medicaid. And Medicaid will provide benefits in a Medicaid qualified nursing home. I don't know if any of you have visited a Medicaid nursing home. It ain't pretty. So it's a much better choice to have other resources available. And one of them, the best, is going to be insurance, long-term care insurance. Now, traditional insurance comes in a couple of flavors. Traditional long-term care insurance has been around since the mid-1970s. There were many more carriers than there are now. There's just a few of them. And frankly, when it first came out, the carriers missed the boat on cost, on the pricing. They underpriced the plans. The result is that as people got older, as the claims came in larger than they expected, and people were living longer than they anticipated, so they had more and more claims to pay, the carriers started increasing the premiums. Didn't make people happy. Nobody likes to get a higher cost for the coverage. Around 2012, we had a new form of long-term care insurance introduced. It's called asset-based linked benefit hybrid plan. A lot of words. Just think of it as a hybrid that uses life insurance as the platform. And I'll give you a little bit more information on that in a few minutes. A couple of important points. All long-term care insurance is underwritten. I apologize for the dog barking in the background. Someone must be walking along in the sidewalk in front of the house. They're all underwritten, which means the insurance carriers want to know about your medical history. So if you have pre-existing conditions, they matter. And it's a basic piece of advice here. Get insurance before you're diagnosed with something. The first question when you're looking at long-term care coverage is, will I be eligible? And that's going to depend on your medical condition. You don't have to be a perfect specimen, just relatively healthy without a nasty pre-existing condition. Then the plan design and your age will determine what the cost of the coverage will be. Now, there's several plan designs. Traditional long-term care insurance, which is the kind that's been around since the mid-1970s. Think of that sort of like homeowners insurance. It provides protection, you pay a premium, but there's no cash value. There's no death benefit. So when you have the coverage, if you need care, it's there to pay for care. If you don't need care, if you have that sudden heart attack and go, never needing care, there's no cash value, there's no death benefit. It's a use it or lose it kind of coverage. That's traditional long-term care insurance. There are a lot of design options. You can get a very modest plan or a very rich plan, but it still there's no cash value to it. And the premium can go up. It's likely to do that. When you get a notice from the carrier that the premium is being increased, my suggestion is to reach out to the agent or broker who sold you the policy and find out what options you have to modify the plan, if that's something you want to do, so that the premium increase is minimized. You can also contact the carrier and get that information. But it's the option of it is available to ameliorate the increase by changing something in the plan. If you're dealing with a client or you yourself have a traditional long-term care plan, find out if it's a partnership qualified long-term care plan. That's a specific type of traditional long-term care, and it has specific requirements in order to qualify. But if it is a partnership plan, that means that the insured can set aside assets equal to the amount of benefits provided in the long-term care policy for when they seek to qualify for Medicaid. So, for example, if they have $200,000 in coverage, they can set aside and not count as assets for Medicaid qualification those $200,000 of personal assets. So it helps you preserve or keep assets that you otherwise would have to spend down. Because if you don't already know it, Medicaid requires that you be basically destitute. You have to spend down assets in order to qualify. A partnership plan will help you preserve, not have to rid yourself of all of your assets. Another type of plan I mentioned earlier is the hybrid, which is a life insurance-based plan that includes long-term care features. Hybrid plans have cash value. They have a death benefit. So no matter what happens, if you live a long life, never need care, just die, they pay a death benefit to your beneficiary. If you do need care, then it pays out from the death benefit first, so that the hybrid plan, always pays a benefit. There is no use it or lose it. There's no wasted premium. The hybrid plans are a real improvement in the long-term care insurance world. Some of the hybrid plans, you can get a continuation of benefits rider. This would be something I'd advise you to look into. I'm going to take a sip of coffee. It's a little Joe for Joe. Ah, I love the background picture. Okay. As I mentioned, the hybrid plans draw from the death benefit first. Then, with a continuation of benefits rider, it continues to pay out. And those riders can even be an unlimited lifetime maximum. So there's a monthly maximum, but with a rider, it just keeps on paying. You can never empty the bucket. Common features in a long-term care plan are a waiting period. It's called an elimination period. It can be 0 days, but it's typically a 90-day elimination period. And some plans can have a 0-day wait for home care, but then 90 days for facility care. And the advantage there is if you have care at home at first, which is the way most people start, and that care at home lasts at least 90 days, you will then have satisfied the 90-day elimination period for facility care. So when you go from home to facility, you won't have a new waiting period. When you're purchasing or arranging for long-term care coverage, there are several things that you can choose. One is the monthly benefit. It can be a small amount or a large amount. You can also choose what the total lifetime benefit will be. And as I mentioned, if you get a COB rider that's unlimited, that gives you a lot of comfort if you're concerned about dementia, because with dementia, that's a much longer horizon for care. It's good to have an unlimited bucket to draw from. Another thing that the policies can have is an inflation factor. As I mentioned at the beginning, costs of care go up. So what costs $100 today is going to cost more than $100 5 years from now. It's typical to have a 3% compound inflation. You should have an inflation factor in your policy. Now, how are you going to pay for the policy? The funding for the policy can be qualified funds, which come out of a retirement plan or your IRA, or non-qualified funds, which would basically be the rest of your dollars, your private money. You can also have a choice of how to pay the premium. It can be anything from a single premium, one lump sum, one and done, or you can have annual or monthly premiums that can be paid for the rest of your life or for a limited number of years. Basically, you have a lot of design options, and that's where the guidance of your insurance broker or agent will be very helpful to let you know what these options are, so you can tailor the plan to fit your needs and your financial capabilities. Okay. Why should we talk about long-term care at all? Well, we all die. Sorry to break it to you, but it's just a fact and reality of life. We all die. Whether it's quickly or slowly, we won't know. We don't know. Consider this. If you don't die, you live. If you live, eventually, you get old. When you get old, you'll probably need some care. When you need care, what's going to be the impact on your family? It's not just you, the patient, the individual. The whole family will be involved. And it isn't always pretty. It can be very stressful. Why does someone get care? What happens that triggers that need for care? It's that you have exhausted your capacity for denial. You've stopped telling yourself, "Oh, I can take care of myself. I don't need I don't need care. I'm a rugged individual. I used to cut trees down. I'm a mountain man. I'm rough and tumble." No, eventually you have to get real. It could be that you can't do it anymore, and your family can't do it anymore. They've tried, but you need help. It could be a physical problem. It could be cognitive impairment. In fact, cognitive impairment is a very serious thing to keep in mind. I read a staggering statistic recently. This is from the Alzheimer's Association. It said in 2024, last year, there was 19 billion, that's with a B, billion hours of unpaid care by family members provided to Alzheimer's patients. Think about that for a minute. Okay. Why should we consider getting insurance? All right. It's maybe obvious to a lot of you, but I'm going to give you some reasons. And by the way, this is for long-term care coverage. This is not short-term health plans. You get the flu. We're talking about something that is serious, something that's going to have you incapacitated for a long while. Remember earlier I mentioned 70% of us are going to need care before we die? 7 out of 10. Look around you. There's a lot of people who are going to need care. Would you be surprised to know that less than 10% of the population has insurance? It's quite a disconnect. When you need care, there's only two options, two ways to pay for it. One of them is out of your own pocket, self-pay. All of your assets are at risk. The other is to have insurance. Why is insurance a better option? Here's a short list for you. One of them is leverage. You pay a few $100s a month in premium in exchange for thousands of dollars a month in benefits. That's leverage. If you were paying it out of your pocket, you'd be paying those thousands of dollars a month for care. But instead, you have an insurance company taking the premium payments and paying out the benefits. Another reason for insurance is asset protection. You have assets that are in investments that are earning for you. You have a retirement plan. and you expect that retirement plan to pay you a monthly income in retirement. If you have a big chunk of that retirement plan go to pay for long-term care, that's less money that retirement plan is generating, so your monthly income will be reduced. Not a good picture. Insurance also gives you control. Now, one of the biggest fears that seniors have is losing control. If you have insurance, you preserve options about care, the who and the where the care will be provided. It can be very important to you. Let's face it, having insurance will help you keep better venues in the mix when it comes time to decide where you're going to go. Remember, you're going to probably start at home, but eventually and gradually, you may need to go into a care community, and that's going to be expensive. Insurance also allows you to avoid being a burden on your family. You know, there's peace of mind with knowing that you have dollars available to pay someone to take care of you rather than needing your family to do everything. When I'm told by someone, well, I'm not going to worry about insurance. My kids are going to take care of me. My grandkids are going to take care of me. The first question I ask that person, are you going to have your grandchild put you on the toilet? And then I keep quiet, because that image is not very attractive. You want to have help. Look, it's in the news. I don't think it's any secret that currently the vast majority of long-term care services are provided still by the family at home. You don't want to be that person. The impact of that scenario is the creation of a shadow caregiving cadre culture. I mean, it's just everything revolves around the caregiving. There's mental, financial, physical stress imposed on the family. There's lost income by the caregivers because they're providing care instead of staying in their job. Articles abound about the cost of care being a major risk to our financial health as we age. Caregiving is also a major risk to the health of the caregiver. There's medical problems. There's early death. Caregiving is hard work. It's stressful. Having insurance eases the stress. It allows the family to care about the loved one and not forced to provide care for the loved one. Having insurance also makes one more attractive to a care community. So it may seem minor until we see a shortage of space or competition for desirable venues. Then the person who has long-term care coverage will win out over someone who's just self-pay, because the care community will know they're going to get paid by the insurance. Long-term care insurance is reliable, folks. Benefits will be there when they're needed. Long-term care insurance has been in place for around 50 years now. There has been only one small, poorly financed insurance carrier that failed. One in 50 years. So if you're worried about insurance being there when you need the services and you need to have it paid, don't worry. There's also in each state an insurance commissioner, and the insurance commissioner regulates all insurance sales in the state. They require contributions by all carriers into a state guarantee fund so that if an insurance carrier fails, despite all the regulatory controls, the filing requirements, everything that the insurance commissioner will do to prevent a failure, if it fails, the state guarantee fund is there to protect the citizens for up to $300,000 each person. So it's a safety net. The reality is, if a carrier starts to go down the tubes, the other carriers will buy the assets of the failing carrier. The assets are the policies. So you may start with insurance company A, end up with insurance company B paying the benefits. By the way, if an insurance carrier stops selling long-term care insurance, that's not necessarily a problem because they still service the policies that they sold. And there's another by the way. Insurance benefits are tax-free, and some or all of the premium that you pay may be tax deductible. So there's tax advantages to the insurance. Okay. When do we get help with care? The reality is, it's when the family can no longer do it. Most families wait too long. They don't want to ask for help. They're worried about the cost and longevity of the person who needs care. So they delay it and they get stressed out. They worry about running out of money. And that's all the more reason to have insurance. If one of you has insurance now, don't hesitate to use the coverage when you need care. There's a mentality that I'm going to keep it in the back pocket. I'm not going to use it. I'm going to have my family take care of me. Don't put your family through that. Use the coverage that you have. Review your policy regularly, at least every couple of years, so you have an idea what you've got. And make sure you tell your adult children that you have the coverage. Tell them where the policy is so that when it's time, it's used. It's what it's there for. Okay, when should you get insurance? In a word, ASAP. As soon as possible. If you're in your late 30s and early 40s, it's a good time. Good time to look into it because you're relatively healthy, or you should be, and the rates will be lower because you're younger. By all means, you should do it well before your mid-70s, because by then you'll be aging out of eligibility. So if you're in your 40s or early 50s, That's a great time to get information, learn what's available, decide what's most comfortable for you, and arrange to get the coverage. You want to do so before you are diagnosed with medical conditions. I guess don't delay is the best advice I can give you. Make a decision, learn as much as you can, as much as you can tolerate. Make a decision about what you'd like and go for it. Pull the trigger. Take responsibility for yourself and your family, because you never know when something's going to happen. And I hate to break it to you, but stuff happens. I'm a living, walking example of stuff happening. A couple of years ago, on the last day of a cruise my wife and I were on, we got off the ship, we were walking around the town, and I tripped on a curb, fractured a bone I didn't know I had in my leg, left tibial plateau. Did you know you have one? It's at the top behind the knee. I also tore a lot of tissue off of that was the left tibial. I tore a lot of tissue off my right shin. I basically couldn't walk. So if you've ever been on a cruise, you know how you're supposed to get your luggage together the night before. I was in a wheelchair. My wife had to do all that. It made me feel terrible. Getting off the ship, she was pushing me in the wheelchair, dragging luggage, pushing me in the wheelchair, dragging luggage. It was an ugly situation. Got home, needed care. I have long-term care insurance. We had someone come in to help me get up. We live in a colonial house, so the bedroom's upstairs. Well, that didn't work too well. Had to have a lazy boy in the den. So that's where I slept. Had help getting to the bathroom. I mean, you feel, it's depressing. You feel a smaller person when this happens. But having help made all the difference in the world, because my wife didn't have to do it. I don't think she could have. I'm 190 pounds. She's 125. She's not going to be able to lift me out of a chair. So having the help made all the difference in the world. And it's comforting. It's stress relieving. And truly, it wasn't permanent, so I was very fortunate. Had surgery and got fixed up. I can stand up unaided now, but it really helped having the coverage in place. Probably no secret, no one is immune. Stuff can happen to anybody, and the time to learn about it is while you're relatively healthy. Plan, prepare, get stuff in place. I assure you, it will feel wonderful when you do. I hope I haven't lost too many people. I've tried to keep it as upbeat as I can, but this is a serious topic to talk about, and it's serious information. I hope that you can gather up. I would love to respond to any questions that you may have. Dexter, is that something that you can let me know what questions have been coming in?
All right, Joe. So we have a question here. Is it prudent to get LTC policy at 62 years old?
The answer is yes, it is. Depends on the person's medical condition. As long as they don't have a nasty, like Parkinson's kind of a situation, it's worth finding out what's available. You should be candid with your insurance representative. Be honest. Let them know what medical conditions you've been diagnosed with already, what medications you take, so that you can learn first if you're eligible, and second, what kinds of policies are available so you can decide what is the most comfortable for you in terms of coverage and cost. But it absolutely is worthwhile for someone in their 60s to look into it.
All right. That's the only question we have right now. I think you've gone through most of the information we have. I'd just like to inform. Okay, we have one more.
Okay.
Another question. Well, anyway, before I proceed, I'd just like to inform everybody we're having the replay of this session sent to you via email. So some people have asked via message that question. Anyway, here's another thing. Once you reach 85 years of age, what happens with the policy? Are you still covered or does coverage decrease?
It depends on the kind of policy you have. If it's one that the typical long-term care policy does not expire, it's like, first of all, as I mentioned, the earlier policies, the traditional policies are like homeowners insurance. You pay a premium and you've got coverage. There was no maximum age for when the benefits would be payable. So they would continue to be available to pay benefits even if you're 85, 90, 100 years old. The hybrid plans, which are again life insurance based, are similar in that there is no maximum age. You should look at your own policy to verify that benefits are available for no matter what age you are. The traditional policies, the premiums may be increased. So you may feel the need to adjust the benefits down to stop the significant increase in cost of policy. But that's only if you feel you need to reduce the benefits. Does that answer that question?
Okay. That's good for me. We'll just see if that's good for
Okay.
our
If there's more
attendee.
information desired, I'm happy to provide more information.
Yes. All right. So we have our questions coming in right now.
Okay.
Here's another one. I am 73 and working for a firm providing long-term care insurance. Should I see if I can take this insurance with me when I retire?
Absolutely ask the question. Some policies may only be available and you may only have that coverage because if it's a group plan, you may only have the coverage while you're with the group. If the policy is portable, then you would be able to take it with you when you leave the employer. But it depends on how the policy was set up to begin with. Remember, an employer putting a plan in place controls the design. So whether it's portable or not is up to the employer. You have to ask.
Okay. Here's a next one. Does Medicare pay for in-home care support for families caring for a loved one at home?
Medicare does not provide any long-term care benefits. The only thing that is, it's expressly stated in their booklet that Medicare does not provide long-term care services. The only thing that comes close is rehabilitation after 3 days in the hospital. They will pay toward physical therapy, occupational therapy, and I think speech pathology. for a maximum of 100 days. The first 20 days is covered at 100%. Days 21 through 100, it's an 80-20 split. You're paying 20% coinsurance. But that's the closest to long-term care services because it's really rehab. It's not real long-term care. Medicare is your health carrier. It's health insurance. It's to pay for the doctor, hospital, prescriptions, and such like that.
Okay. Moving on to our next questions. We're down to our last 10 minutes and last 3 questions. I think we can still entertain more questions if they have. Anyway, moving on to the next one. Mom and dad paid into a LTC policy for many years before dad passed, and mom developed Alzheimer's and forgot to pay her bills, including the LTC insurance premiums. The policy has since lapsed, and now that the family has learned what has happened, is there any recourse to get the benefits that were expected to be covered by their wise plan to use an LTC insurance policy?
Okay, it's a difficult situation. It's a sad situation. If the policy has lapsed and terminated because it has gone beyond the grace period, you're just out of luck because there is no recourse. Once the policy is terminated, it's gone. If it's still in the grace period, which is usually 30 to 60 days after a premium is due but not paid, you may be able to pay it quickly and preserve the policy. But it doesn't sound like from the question we're in that situation. I would make a suggestion to avoid that kind of a problem. I would advise everyone who has a long-term care policy to inform the carrier of a secondary person who can be notified if there's a default in premium payments, so that if a premium is not paid, notice goes out not only to the policy owner, but to a second person, so that they can they can have a heads up that a premium is due and not paid, so you can avoid having a policy terminate. It's a very sad situation. Not unusual, especially with dementia being involved, but there's just no recourse there.
Okay. Here's the next question. Will LTC cover paying a relative that is in the medical field that may be providing care as opposed to a facility or outside agency?
The answer is probably. The policy generally, well, it depends on the type of policy. There are two types. There's cash and reimbursement. Cash policies, when you qualify for care, will just send or deposit the payment to the insured every month. Then the carrier doesn't care how you spend the money. If it's a reimbursement plan, then as the word sounds, it will reimburse for for care expenses. And those types of policies usually require a licensed caregiver in order to reimburse for the cost. So the person who's having a relative provide care, if they are a licensed professional, shouldn't be a problem. If it's a cash type policy, won't be a problem. But it really depends on the situation. It's not universally true.
All right. Here's another one. I know you've touched on this, but for the benefit of the other people, what is the average monthly cost of assisted living?
Assisted living depends on where you are in the country, and there are a number of assisted living communities and types of facilities that are available. I believe somewhere in the range in Maryland, somewhere in the range of $6,000 to $9,000 a month or more would be realistic. I would encourage, depending on where the person is, that they go to the Genworth website, Care Scout, and you can put in a zip code or a name of a city or a location, and that'll give you an idea of the cost of care for a variety of types of facilities in that particular location. So that's Care Scout, CareScout.com/cost of care. And then I hope that will help them get the information they're looking for.
Thank you very much. And I believe that's it. We have duplicate questions, so I won't be answering that. We won't be answering that. Anyway, for everybody who are watching us today, let it be known that there's gonna be replay sent to you via email. So if you have registered for this webinar, we have your email. Just watch out for the URL of the event replay today. I'd like to call on Will. Will, do you have anything to say before we end? It's the final 4 minutes of our event today.
No, this was just very informative. Joe, thanks for the information. It's a very serious topic that we too often put off, but you sure gave us all a lot to think about. So thank you, Joe.
Mm-hmm.
You're very
Thank you
welcome.
very much, Joe. Yes. Thank you very much,
Welcome.
Joe. Anyway, for those who are watching us, I'd like to invite you for our next episode, again happening on the third Wednesday of the month. And our topic, Will, is related to Alzheimer's, correct? So about understanding Alzheimer's, we're gonna have
Yes.
a lot of
We're going to have
information.
someone from the Alzheimer's Association speak on being more preventative and what to look out for, and provide a great overview. What's great is they're with the association, so very valid source, very relevant topic, and unfortunately, it's something that touches too many of our clients.
Okay, so with that, I believe we have done our work today. It has been a pleasure hosting you today, Joe. We've learned a lot. I have learned a lot. I believe a lot of our audience today would say the same. Would you agree, Will?
Thank you.
Yes, there's a lot of good
Yes.
feedback happening. Lots of questions, lots of thank yous.
True.
So thanks everyone for your time.
All right, so we'll see you again next third Wednesday of the month. Again, if you have follow-up questions, you can wait for our email or email us directly, contact us. We can connect you with Joe. Wait for the URL of the replay, and we'll see you again. Bye-bye. Until next time. See ya.
Stay well, everyone.
At Visiting Angels, we're committed to enriching the lives of elders and their significant others. Our monthly coffee chat sessions aim to make your lives easier and better by providing quality information from our expert panelists. We're here to elevate your quality of life, offer practical wisdom, and ensure you have access to valuable insights. See you again next third Wednesday of the month.